The essence of this lesson is how to identify false support and false resistance technically. Technical analysis is broad and there are infinite strategies that works in the market. However, the best strategy is the strategy that a trader knows best. As we are aware of, in chart pattern and analysis, we have three strong patterns, which are the engulfing pattern, the morning star, and the doji pattern, that is the indecision pattern. However, there are several other patterns in the chart that mimic this pattern and they are inconsistent in the sense that they only mimic the pattern, they are not the pattern. So we call them false patterns. And these patterns, they show themselves in support and resistance areas in the chart. In addition to this, they are very unreliable and they are undependable. On the chart right here, we are going to be showing you these patterns and how they show up. And also the engulfing pattern, the morning star patterns, and the evening star patterns, not all the times are they strong. Sometimes they also show up in the charts as false support and resistance. You need to keep in mind that technical analysis works hand in hand with fundamental analysis. In fact, in my own view, fundamental analysis supersedes technical analysis, as the technicals that show up in the chart are nothing but offshoots of what happens behind the scenes. That is the fundamentals. It is in the fundamentals we have political news, economic news, events that shapes the global economy, as well as market sentiment. All these factors come in place to shape the technicals that we see right here on the chart. Now let us begin with the engulfing pattern. An engulfing pattern is a pattern as such where for a bullish engulfing we are going to have a bearish candle, that is a sell candle like this, and we are going to have a bullish candle that absolutely engulfs it like this. You can see the first one we have here is a bearish candle, then we have a bullish candle that absolutely engulfs this whole candle, creating a buy. As it engulfs it, it creates a buy. So this is an engulfing candle right here. Another one is here, we have a bearish candle and we have a bullish candle that engulfs it. However, there is a perfect engulfing candle. For instance, we have one here. This is a perfect example. We have a bearish candle here and we have a bullish candle that engulfs the whole body. From the wick of this bearish up, it engulfs it up. So now to identify a false resistance, whichever candle you see that forms as the first candle of the day, maybe you see a bullish engulfing that forms as the first candle of the day, it is a false resistance or support. When I see that on the chart, I'm going to show you, because we are backtesting and checking real-time data to see these things, not just me telling you. We need to work together on the chart to see them for ourselves. Whenever you see an engulfing candle that forms as the first candle of the day, you need to know that it is a false support or resistance. This lesson I'm giving right here is $1 million lesson, because I learned this through experience and through the hard way, but you are getting it for free, even though majority are going to be oblivious of the value of this lesson. But I'm sure that the minority that keep this lesson in mind, it definitely will pay you a lot more than you can imagine. I'm 100% sure of that. So an engulfing candle that forms as the first candle of the day usually is a false support or resistance. Whichever retest to wait for within that zone is highly likely going to fail. As you can see, this engulfing candle, it doesn't form as the first candle of the day. And what happens after the market drops? After market tests this fair value gap. So as long as it doesn't form as the first candle of the day, it is safe. You can see this, it doesn't form as the first candle of the day. What happens after the market drops? But once it forms as the first candle of the day, you are going to have the market most likely breaking through it, because it is nothing but a trap. It is a false support or resistance alike. There are lots of examples on the chart, but it will be very meaningful if you can do the assignment on your own. Secondly, once you see this candle forming as the last candle of the day on the 4-hour, it is a false support or resistance, because the first candle of the day is the market maker's reset, and the last candle of the day is the market maker's accumulation. Because once the market closes for the day, the market maker does what? He does his recording, he does his accounting, and what does he do most of the time? He sweeps away the majority of the orders within that zone. It goes in the opposite direction. That is why patience is an important ingredient in forex trading. You must be patient for the right time. You must be patient for your strategy to show up, and you must be patient for price to reach your take profit. You don't just act on impulse. An impulsive trader is a losing trader. So do the assignment on your own. Check out for patterns that appear as the last candle of the day and the first candle of the day. Then you are able to identify false supports and false resistance. Most candles that appear as the last or the first of the day, you are going to be able to identify the false support and false resistance. You can see this engulfing candle, it doesn't appear as the last candle, it appears as the second candle of the day, and price pushes up. Do your due diligence to check for patterns that appear as the first and last candle of the day. so you don't fall for the trap of the market maker. The essence of this channel is to make you a better trader. But the bulk of the work you are going to do on your own, because I'm not going to be there when I'm taking your trades. You are going to be there to take those trades by yourself based on the confidence you have on your analysis and the confidence you have in your psychology. Check out for patterns that fall as the last candle of the day. Learn more on your own. Do your due diligence. Become a better trader and shape yourself to the trader you want to become. So, either it is an engulfing candle, a morning star, a doji, once it falls as the first or the last candle of the day, either on the hourly chart or the 4-hour chart, you need to know that it is a false support or resistance. Because for the market to either buy or sell at the opening of the day, we need to have an accumulation, a trap for sellers so the buyers can buy, or an accumulation, a trap for buyers so the sellers can sell. That is just how the market moves. So you cannot expect the first candle of the day to just give you the impulsive move to the intended direction. So following these arguments, we can conclude that timing is important, and however there is more to the timing, all these are taught in the mentorship. Do the due diligence to learn on your own. Accumulate as much knowledge as you can. Become the trader you wish to be. And I pray that the trading gods be in your favor. As you can see, this candle, it is the first candle of the day, a sell candle, and what happens? The market breaks the zone. So there are many numerous examples you can check, you can go and see on your own. So you don't just trade anything you see or whatever you feel like. You need to be choosy with your trades. You can see this candle is the first candle of the day, a sell candle, and later the market breaks the zone. It is a false resistance. So that is just how the market operates. Let us have more examples. Let us have more examples. As you can see, this pattern for a buy, they are the last pattern of the day. Later market breaks the zone. So once it falls as the opening of the day or the closing of the day, you need to be very wary, because no trap has been formed in advance yet. Once it falls as first pattern of the day, do your due diligence, check on your own, learn on your own, and master the markets. I wish you the best. If you find this content useful, like, share, subscribe, and follow for more.